It's Tuesday, June 7th, and this is the video. Look, it takes 30,000 to a million. It's a Tuesday, so it's a market day, so that means account update. I'm going to go through the account, show you where I'm sitting at, every single position, and then I'm going to talk about markets and a new move that I've initiated here, that I've kind of done some decent amount of homework for. So I'll show you that and talk markets a little bit, and that'll be it. Going into the account, I'm sitting at almost $184,000, which is up a little bit over, well, I guess about $4,000 from yesterday. I did not make an update yesterday, but it was up maybe another $3,000. So working my way up again. I don't know how long this market rally is gonna last. This bear market rally is gonna last. If judging by the Qs, it's actually not gonna be much longer. I'm sorry, by the S&P, not going to be much longer, but there is some room still, like maybe 5%, something like that. But I'm not anticipating much more than this. I think it's probably time to start layering some short positions if you're going to be trading the ups and downs of the markets. I don't really do that because I'm not confident in my market predictions, so I'm just going to do what I have been doing, and I'll continue to do it. So going into the account, we'll show you all the options positions on the right first, so you can see all the information you need about the option position in this little box here. I'm going to scroll through it really fast, and then you can pause the video at any moment to try to figure out the exact position that I'm holding. This is the equities here. Apple is up 1.5%. Realty Income 1.6, Main Street Capital 0.5, JD 2.4. The ADRs, Japanese, the Chinese ADRs had a really good day actually, a couple of days to be exact. So I don't know if that's going to continue or what, but apparently there's some kind of signals from the Chinese governments that their quote-unquote crackdown is nearing an end, and that is why they're catching a bid here. Goldman Sachs fairly flat. VipShop up 1.29. VipShop is actually up quite a bit, but I've reduced my position by more than half now. So I may actually even reduce it some more. I'm actually in the positive on this position, which is amazing. I've sold 4 calls, 4 $10 calls. That means that 400 shares of these 1,200 shares are about to go bye-bye if VipShop decides to stay at over 10. If you want to look at the investing tab, this is what it looks like. The margin used now is only 13.46%. So quite a bit less than it was even just a week ago. This are my positions sorted by total return. Apple number 1, Realty Income, VipShop. The longer dated positions are usually the ones that return the most, especially if they are focused on growth and share buybacks, which the only company that's fits that category in my account here is Apple. You can see that the portfolio is fairly concentrated. I have 3 core positions, I guess. Apple, Realty Income, and let's sort it by equity. Apple, Main Street, and Realty Income are my core positions. Everything else is up for grabs on the chopping block. So that means Smith & Wesson is about to go if it holds above $15 by June 17th. JD.com is kind of a long-term play, but I'll be willing to sell it if it doubles from here, all of it. VipShop also willing to sell if it doubles, but I may keep some leaps that expire either next year or in 2024, just in case those stocks decide to explode on the upside. Goldman Sachs I would like to keep, but I'm willing to sell for the right price. And DD Global is only in my account because I want to find out what happens when they delist. I want to see if I'm going to get over-the-counter shares or what's going to happen with the stock, or whether they're going to just reimburse me in cash. I'm not sure. So that's why it's in the account. out of curiosity. All right, so that is the account. Everything is listed. The only position that you might be questioning, if you caught it, is the short-term play on Paramount. So Paramount Global, I tried to make an evaluation. I try to figure out whether the implied volatility for Paramount is higher or lower than actual volatility. And so I wanted to see if there's an arbitrage play there, and I think there is. And so that's what I'm doing. And this is how I make most of the money for this account, is by volatility arbitrage. So I figured out that the volatility on the stock is actually not that high. I mean, it's scraping about along the bottom of its valuations. So it went up to, it's been as low as 27 and as high as 38 in the last 6 months. So the volatility is really not that big. It doesn't travel very, very far, very fast. So what I decided to do is sell some of that volatility, some of the implied volatility, because the premium is fat. So fat premium and low actual volatility means opportunity for arbitrage. I sold 10 contracts for 49 cents each that expire on the 10th, which is the end of the week. This is the trade here. So I got a total of $490 worth of premium that hopefully expires by the end of the week, worthless. The conditions for this expiration are Paramount remaining over the $30 price target. I think it will do so. If you look at the last week, look at this price action, right? It's just a grind. It fell down, but it won't fall further below 30. So it's been grinding down that $30 mark for quite some time, very consistently, and expect this to continue through the rest of the week. I think Friday is going to be exactly the same, and this volatility, everything is going to get crushed. So everybody who buy an option up or down on Paramount, I think, is going to lose. Now, obviously, I could be wrong. Everything that you do in the market takes risk, but this is the decision I've made. I've put up $30,000 collateral for this trade, and it's actually taken up $60,000 out of my margin, because it doubles the amount that you need for risk control purposes. So why Paramount? Well, it's a very good question. Their price to earnings is 5, which is very impressive. And I think they'd make a very, very good collateral. They also pay a dividend of 3.16. So that's also very attractive. And if you're wondering, their payout ratios, they can actually cover that with their payout ratio. And in fact, why don't we go to stockanalysis.com here and look at PARA. Tap in one hand, slow. So they do have quite a bit of debt, but the debt is very serviceable. Okay, you can see their market cap is about 20 billion, and their enterprise value is a little bit over 33 billion. So they have about 10 billion in debt. Let's see if we can find it here. Net cash 13 billion negative. But it's very serviceable, and in fact, if you look at their dividend, their payout ratio is only 15.5%. So they can service their dividend, they can service their debt. I don't understand how they got in such high debt to begin with, maybe content or something like that. But if you look at their overview, look at that bottom chart on the right, they had a burst of increased revenue and earnings 2017, maybe acquired something. I don't know actually the history of Paramount. I'm not a Paramount expert. There are plenty of people that know this company inside and out way better than I do. But I have determined from the research I've done that it's worth having this company as collateral. So even in 2021, when people are going back to work, it earned double the amount they did in 2020 and higher revenue. So even if their earnings decrease by half, I think that they'll still be in good shape. If you want to look at the quarterly revenue, this is what it looks like. It's very, very solid. And in fact, with um, movies like Maverick coming out, Top Gun, they're going to get another spike of revenue and therefore also earnings, I expect. Yeah, this is what their operating income looks like. And then other things that are of importance are the outstanding shares, and they have been selling shares, but probably in order to pay their dividend. But it's not a crazy amount, and they haven't even doubled it from 2019, so it's not horrible. And they've been increasing their dividend very, very steadily. They're very confident. That tells me that they're very confident that they'll be able to pay out their obligations, and I think they will. With a 15% payout ratio, that's really good. But enough about the fundamentals here of this company. I think that even if it drops below $30, it's going to be a very easy collateral to get rid of, and I can just sell call options against it. I doubt that it's going to drop below $27 in the next couple of weeks, so I'll be able to collect fat premium on it, even if the stock decides to drop lower. I will have made up those losses by the collection of this premium. Hopefully the IV stays high through the weeks if I do end up with the collateral, so I can continue to make money. But even if it doesn't, I think it's a worthwhile risk, and I don't regret this decision here. Obviously, this is not investment advice. You gotta do your own due diligence and homework whenever you do any kind of trades in the market, and there is a risk of total loss of capital whatever you do. Well, not whatever you do, that's false, but in most situations in the market, you could lose everything. So just please be careful. And nothing I say here is financial advice. Okay. All right. Hopefully, that cleared the account up. I will make another video tomorrow. Hopefully it's another green day. I'm expecting perhaps maybe a minor correction, then another up day, but it's probably going to be a topping pattern of some sort in the next week or so before we resume the downturn. So those are my expectations, but I'm just going to continue what I'm doing, so it's not going to affect the account procedures. All right. Hopefully you guys made money today and yesterday as well. Good luck to y'all, and peace out.